Hello, everyone. Welcome to the weekend edition, which is good through Sunday, November 21st, 2010. My name is Scott, and I am a mentor and an analyst here at Grok Trade. We finally got some tradable movement, at least tradable for the day traders. Well, the markets ended up closing slightly positive across the board. The Russell's leading the charge up almost a 0.5%. I have up a 15-minute chart of the S&P 500 index. You can see here where the market opened slightly negative and then traded lower for the first hour of the day, finding some support in this area, at which point we reversed these wholesale areas and traded higher throughout the day, closing right into yesterday's resistance area. That's bullish. If I back this out to the 60-minute, you can see this area of support and resistance as this triangles into this close today. However, we are getting higher swing highs, higher swing lows, and this bullish flag pattern indicates that we will early next week move higher. Although we are running into a lot of overhead resistance. As we take a look at the daily here, we have this previous swing highs. We are testing larger time frame resistance areas. We are working through this. It typically will swing for a bit as we come up into this area. So although the odds would favor a move higher on Monday and Tuesday, I really don't look for much follow through next week beyond the first day or two, at which point we'll be back into these test areas. And checking the weekly, we did doji out, which you can see looking at Monday, Tuesday, Wednesday, Thursday, Friday. We ended up closing right about where we opened on Monday. What does that tell us? Well, we've bumped into larger time frame resistance at the end of a long run. It's no surprise that it tends to work through this. If the markets remain strong, this will flag and then break. If it pulls back for a couple of weeks, that's also fairly bullish as it finds this support at these rising 20-bar moving average and lower trendline wholesale type of areas, at which point we'd be interested in taking investment trades long again and swing trades long again. In the meantime, it's very important to hedge your positions, protect your positions, whether you reduce that size that you're trading or you take hedge positions, shorting indexes, or however you like to hedge. We are at that higher risk test type of an area where we could get a pullback for a couple of weeks, we could get a base for a week or two or three before we work through this, which does show up on the monthly here, this previous resistance area. However, this is strong. We have received this swing low, which is much higher than the market lows back in 2009. We are 3 months into a 2 to 6 month type of a run from a wholesale on up to retail type of an area. So we do have room to move higher over the next couple of months. In fact, this shows up even better on some of the other indexes. Taking a look at the NASDAQ Composite, here you can see the same thing. We've run into this resistance. It's no surprise that it's testing this area. We'll flounder around. We'll see that with the consolidation swing patterns on the daily, with weakness on the weekly. Nobody has a crystal ball. Anybody that tells you that they know what the markets are going to do, that's pretty much a good indication to turn and run the other direction. All we do is we watch the market winds and set our trades accordingly. In higher risk environments, we sit on our hands or we trade the smaller time frames where the trends do set up. For the longer term picture though, with this weekend edition, I'll look for this to consolidate base sideways over the next couple of weeks as it works through this resistance area or pull back into support areas. That will determine how we structure our swing and our investment trades. Looking back at the monthly, if we copy that lower support, put it onto the upper retail type resistance areas, we can see there's our target over the next 3 months from here. Things are bullish. Unless we get that double top, which we also need to be aware of. Anything can happen. We need to be prepared for anything. If it double tops, pulls back, then we'll structure our trades to respond to that situation. Right now, as we test through this, we'll sit on our hands and we'll wait until the market tells us what to do. Taking a look at the Russell. Very similar situation. On the monthly here, overall we're strong. Here's our target areas over the next 2 to 3 months. This is where the odds show us right now. But it's got some overhead resistance to work through first, and it typically won't just blast through that. It will flounder in these areas right in here as we watch and see what happens and how it develops. So the point of this is protect your positions. It's certainly not weak enough yet to worry about closing down some of the longer term trades, not unless we see a double top on the monthly. Then I would become concerned, as that would show that weakness. But for now, things are still fine. We're still on that move from wholesale up to retail, and we still have a good 2 to 3 more months before we run into the next real strong level of overhead resistance, assuming we're able to work through this. So stay tuned. We'll certainly be on top of it as it occurs, as things develop, with what we see and how we will respond over the next couple of weeks. And for the day traders, you should get a little bit of a pop early next week, and then it's going to be indecision time again in all likelihood. So trade safe and trade smart. And if you feel that you could use some help, don't hesitate to let us know. Click on the Meet the Mentor, learn more. Let us know you're interested and we'll send you an invite. Have a great weekend.